Hi there, I'm Tyler Ballhorn. This is the Stockscores Market Minutes for September 13th, 2013. This week I want to talk about the trend. We've all heard the saying, the trend is your friend. It's odd, but investors tend to doubt trends. They look for faults in upward trends, and they try to buy bargains in downward trends. Instead of trading with the trend, many investors try to fight it. My advice to you is avoid the doubt. Do what the market says to do and simply trade the trend for, as the saying goes, it is your friend. Here's a chart of the S&P 500 going back the last 5 years, and you can see that since March of 2009, this market has been in a bullish trend aside from about 6 or 7 months of bearishness in the middle of 2011. And yet, throughout this upward trend, I have heard nothing but doubt and disbelief in the strength of the market. And these people who doubt the trend have been sitting on the sidelines while the market continues to rally higher. Meanwhile, on the TSX, we've seen for the past couple of years a sideways trend, one where there's really very little activity and not a lot of opportunity. And that has been the reason why I haven't been too ecstatic about buying Canadian stocks for the last couple of years, because very simply the trend is sideways, and that's a tough trend to make money in. All right, let's get into this week's analysis. Here is a daily chart of the S&P 500, and you can see that we held the upward trend line. That was actually more the short-term upward trend line, which I've drawn in green. We've bounced off of that to start September and rallied quite nicely. A real good performance for the S&P 500 so far this month. We are coming up to that first line of horizontal resistance, which was the high set early in August. And I expect we will stall under there. We're kind of stalling just below that now. But realistically, it's not out of reason for the market to rally up to that top upward sloping channel line at around 172, which is more or less 1,720 on the S&P. So we remain bullish on the S&P, although you kind of miss the bounce if you're buying the market now. On the TSX 60, we are building optimism underneath resistance. The market rallied into resistance last week. It got stuck there as more or less we expected. And I expect that we will again test that resistance. And really what we're looking for here is the breakout through resistance. It's something I think is likely to happen sometime between now and the end of October. And so we want to maintain a neutral rating now, but with a good deal of optimism that we can soon switch to a bullish rating on the TSX 60 market. The downward momentum in US treasuries is diminishing. We're starting to see a basing pattern form here, and I think there's a good chance we see a little bit of a bounce back in treasuries quite possibly next week. The market has priced in an expectation for a tapering of the US Fed stimulus that has been underway for some time, and I think it'll be the sell on the rumor, buy on the news kind of a situation for US bonds. So look for this to probably bounce back next week when the US Fed meets and discusses whether they are in fact going to taper off of some of their stimulus. The Chinese market and really the emerging markets in general have had a great month of September. They've rallied up to resistance on the Chinese market. The FXI is the ETF I'm looking at here. Stalled there, not too much of a surprise. A little overbought. You see how far we are above that green upward trend line. So my feeling is I'm bullish on emerging markets, but I think in the short term it's very likely we'll see either some sideways trading or even a pullback in the short term. And so if you're very short-term outlook oriented, then you want to be a little bit cautious next week. But longer term, I like how this is shaping up. In similar situation on the emerging markets, although it is not threatening to move through any resistance here. And as we go around the world, I looked at a lot of charts of global stock markets, and we generally are seeing some good strength, even in countries like Spain and Italy, which have been real drags in Europe. And the only place where you really don't see a lot of strength yet is Brazil. And some of the Asian markets are still lagging a little bit. But generally speaking, we're seeing emerging markets start to improve. And that's good for Canada because, of course, Canadian commodities are in demand when emerging markets are improving. US dollar fell off this week, and we would expect then that commodity prices should go higher because, of course, it's cheaper when the US dollar is lower. We'll look at the chart of gold in just a moment. But really, the US dollar is in a fairly volatile sideways trading range, shows a good deal of uncertainty, although the volatility is narrowing somewhat in the near term here. I don't really see any strong directional trend in the US dollar. It's kind of bouncing around in a relatively narrow range. Here is a chart of gold. It rallied up to resistance. I talked about this in my daily newsletter quite a bit this week, where gold overcame the oversold condition and rallied back to that upward trend line, but that's where it got stuck. And it actually is showing signs that it's going to hold below that downward trend line, and therefore I think we're probably going to see some further weakness in gold, and I would be cautious with gold and gold miners right now. Oil market building a nice optimistic pattern, has not gone down as much as you would think with the quieting of concerns over in Syria. And that tells me that oil is actually moving not so much on what's happening in the Middle East, but more so on a global recovery. And we see that in the global stock markets getting better, and the oil market is starting to show that as well. So that's another positive sign, particularly for commodity-based economies like Canada. Fear fell off this week back down to the lows of the year, or near to the lows of the year. And we've seen it numerous times in the last year where we get a rally higher for a week or two and then it falls off. And we've seen that over and over again. And I think that that may be happening yet again. So my outlook then is bullish on US stocks, neutral on Canadian stocks, bearish on gold, and bullish on oil. Headline risk is no longer a factor in the market. The bulls continue to buy weakness, and the US strength is spreading. Gold is falling out of favor as a hedge against uncertainty, and oil is showing the benefit of an improving global economy. The Canadian market is on the verge of a breakout, and that's something to watch for if you are interested in investing in the Canadian markets. Well, that has been the Stockscores Market Minutes for September 13th, 2013. Have a great week in the market and trade well.